Good afternoon, everyone. Thank you for joining us. My name is Nitzan Goldberger. I'm the State Policy Director at ESA. I'm very excited about this webinar today, and I'm glad you've all joined us. Today's webinar is titled How to Create Opportunities in the Emerging C&I Energy Storage Market. We've got two fantastic speakers that I'll introduce in a moment. Today's webinar is being recorded and will be available at www.energystorage.org, our website. Participant lines will be muted throughout the webinar. However, we welcome your questions and comments, which can be submitted at any time via the chat box on the bottom left side of your screen. Hopefully you all see that and can submit your questions as the webinar continues. Following the webinar, you'll receive a link to the recording and the slides, as well as a brief survey regarding today's topic and topics for future webinars. This is a great opportunity for you all to provide us feedback on what kind of webinars you'd like to see moving forward, and we really appreciate your input. So I hope you take that survey. All right, so we have two fantastic speakers today presenting to us on the C&I storage market space from IHS Markit Technology. Julian Jansen is their Senior Market Analyst. He focuses on European and North American energy storage market activity and industry trends. Julian is responsible for coordinating global research into energy storage, as well as analyzing key drivers and emerging business models driving storage deployment. He's joined by Cameron Barati, research analyst, who currently is responsible for researching PV and energy storage markets in North America. He covers the supply chain and downstream markets and is based in Austin, Texas. We are happy to have Julian and Cameron joining us today, and without further ado, I'll turn it over to Julian to kick off the presentation. Julian?
Great. Thank you very much, Nitzan, and good afternoon, everyone. I'd like to start today's webinar really with a bit of a question, and that's, will we achieve 1 gigawatt of behind-the-meter C&I energy storage installed in the United States by 2021? Now, it's really this question that we'll be looking to tackle throughout today's presentation. So it's really all about whether this number can be reached and how it can be reached and who's best positioned to take advantage of that growth. If we go along, I can nicely skip the introduction because Nitzan did that very, very nicely, so thanks for that. So I'll jump straight to today's agenda. So as I said, I just posed that question, can we achieve 1 gigawatt of C&I energy storage by 2021? And really the agenda will go through the trends and really going through the key points of answering that question. So we will first provide you with a high-level overview with what we'll be talking about in the webinar. We will then do a short poll. Actually, we will be doing 2 polls throughout the webinar, and we're really looking forward to also hearing your opinion and discussing maybe some of the opinions that come out from the audience. We'll then look at the economics of C&I storage based on our proprietary modeling before looking at some of the other policy and regulatory drivers we see in the market. Based on all that, we'll then also look at some of the competitive positioning and key trends we see around the supply chain and around suppliers of C&I energy storage, followed by the key conclusions and takeaway, which hopefully will spawn lots of questions at the end of today's webinar. All questions you can submit via the little box on the left-hand side, and we will look to answer them at the end of the webinar rather than throughout. So before we get started, just a very quick introduction of IHS Markit. Most of you are probably familiar with who we are and what we do. But for those of you who aren't, IHS Markit is really a global research and market intelligence firm covering a huge range of industries, really from energy to technology to economics and automotive. And it's really through this connection of different industries and different research that we can cover technologies like energy storage in a very comprehensive way, understanding both the entire supply chain as well as the end customers and the big trends shaping the energy industry. And just a little fact, maybe be quite interesting, 94 of the 100 largest US corporations are actually part of our customer base. And as a company, we've been covering stationary energy storage since early 2013 with a dedicated team of analysts globally. So we have analysts in the US, in Europe, as well as Asia. And really all data that we'll be presenting today comes from our energy storage intelligence service and a recent study we did as part of that service. And you may be familiar with our coverage on energy storage, but we also cover other markets in North America, especially the solar side, which Cameron, if you want to say one or two words about that as well.
Sure, yeah, happy to do that. So yeah, as Julian mentioned, we also cover solar PV technology markets, and specifically part of my role with IHS Markit is to cover the North American market for solar. And that is a dedicated service that we also run that I happen to lead, and we're covering end-to-end market analysis for the region, incorporating analysis and assessment of the residential, commercial, and utility scale PV landscapes and market forecasts by state market and associated attractiveness ratings for those markets, but also doing upstream research on the module side for the inverters and structural balance of systems and electrical BOS, and bringing in soon to incorporate storage into many aspects of the solar market as well. But certainly a comprehensive service for both storage and solar when it comes to our team capabilities on a global scale.
Great. So I think that's probably enough about IHS Markit. So let's jump straight into the presentation. And we'll start with basically the summary of the entire presentation. So if you're really short for time, this is all you need to know. Joking aside, really, this is just the kind of little track to get you through the webinar and what we'll be looking at. So we're starting off from base today, where in 2017 we saw around 60 megawatt of behind-the-meter C&I storage installed in the United States, and we expect that to grow to above 400 megawatt installed in 2022. And really there's a range of drivers pushing that, everything covering from price declines, the introduction of targets across different states, and also looking at new revenue streams and the diversification of such revenue streams going forward. Sorry for the interruption. We've just had an issue on the presentation. If anyone can't see the slides, please let us know and we will look to fix that. But before we, assuming that everyone can see the presentation, let's take a look then at how we're going to structure the webinar. What we'll do is we'll look at where we are today, i.e. the base case from 2016, 2017, and then see how we expect the market to grow to 2022, what will shape that, what drivers will shape that, and then who's best positioned to take advantage of that. So to get started, let's look at where we are today. And before we start, just a very quick introduction to how we conduct our research and what really forms the foundation of this report and this presentation today. You'll be wondering where the numbers come from that we'll be presenting throughout the webinar. Actually, they come from primary research because we conducted the first comprehensive survey of all major players in the US C&I energy storage market, and supplemented that with additional primary research with a range of stakeholders such as policymakers, utilities, and different suppliers along the supply chain. And the results from that survey can be really seen here on this slide. So what you can see on this slide is the installed base as of October 2017 of behind-the-meter commercial and industrial energy storage. And as you can see, around 118 megawatt were installed as of that time, and around 237 megawatt hours. What we only count here is operational projects, so we are not accounting for projects that are either under construction or that are contracted, so there's only projects that are operational today. And what we can really see here is that it's really split by system size. We see a lot of small systems in the market below the 250 kilowatt size segment, or we also see a range of larger projects above 750 kilowatt in size, which basically are installed at larger industrial customers. So there's really a split between a large number of smaller customers and then a small number of large customers that account for the large majority of installations today. In terms of the regional distribution of today's installed base, I think it's pretty unsurprising that the overwhelming majority of installations are in California. So we see around 75% of the cumulative installed base operational in California, and this is on the megawatt hour basis rather than the megawatt basis. But we're also seeing the emergence of new markets across the United States. So certainly markets such as Massachusetts, New York, Hawaii are starting to become more prominent. And we actually expect over the course of the coming years, more states to follow suit and make more of a splash within the C&I market across the United States. Finally, looking at the current installed base, let's take a quick look at the duration of energy storage systems. What we see today is that around 67% of systems installed are between 1 hour and 2 hour in duration. However, going forward, we really expect the 2 to 4 hour segment to grow quite strongly, and it is primarily driven by utility procurement in California, calling for 4 hour duration systems to support capacity requirements. So we do expect a bit more of a diversification within the duration split, shifting more towards the 2 to 4 hours, and actually some growth in the above 4 hour segment, especially when we're talking about microgrid systems. So summarizing the current installed base or the current market, we're seeing that the C&I market has evolved quite strongly over the past 2 years, obviously with strong drivers in California such as the SGIP program and demand charge management. But we're also seeing is that really the market is diversifying towards different applications and different states. And that's driven by a range of applications and drivers. And before we go into the next section, looking at the economics of C&I storage, we'd like to have a little poll, and I'll pass over to Cameron now to introduce that.
Great. Yeah, thanks for that. So hopefully if you can see the polling question on the screen through the application here, we'll start the first poll discussing what core revenue streams C&I energy systems can rely upon going forward other than demand charge management schemes. So hopefully you can see this and please review the answer we've selected here on the options, and we'll review the results together in a bit. But just to go through some of the options, so we have arbitrage or energy arbitrage, essentially charging when energy is cheap and discharging to offset energy consumption during periods of associated peak rates and demand. We also have demand response, responding to utility signals to adjust consumption to help manage the overall demand on the local electrical grid during peak periods. Reliability, backup, and uninterruptible power systems, so the ability to maintain electrical power in the event of grid outages, temporarily maintaining critical functionality. Also resource adequacy and or capacity, so providing contractual services to provide capacity during peak periods to maintain the adequacy of the grid. And of course solar self-consumption or time shifting solar generation, so storing that PV generation for use during peak periods of demand, and broadening the production to morning and evening hours to power operations or take advantage of rate structures as they're designed. And then of course there are other options as well. But we'll take a minute here to see how people respond, and we'll review the results together.
Yes, we've had about half the people voting in the poll already, so we'll give you another 10 seconds or so to cast your vote. It'd be great if we get good participation. It's currently looking like quite a diverse range of answers, so I'll be closing the poll any second. So if you want to cast your final vote, please do so now.
All right. So certainly a diverse range of answers and selections here. Perhaps the two leading ones, demand response and solar self-consumption, coming from a perspective of these may be more readily available as viable opportunities with various utilities or in various markets, depending on the circumstances. But still a diverse range of other options being interested by the participants here and certainly in the market at large. So that's good to see. But for our economic analysis, and I'll move on to that now, we focused on, or we're going to focus on the aspect of demand charge management, as that's a more clear-cut opportunity for many C&I customers and the rate structures associated in their markets. So what we're looking at here is that we designed a model to analyze the payback period of behind-the-meter storage systems for various customer types and markets primarily employed for managing demand charges. And just as a general disclaimer, the model was able to act with perfect foresight, as we only applied this to with strategies to historical data that was available, while of course an actual system would have to rely on predicting the needs of a given customer based on the historical data provided. And while the model we developed to create this analysis focuses purely on minimizing those demand charges using the battery system only, occasionally energy charge savings were also made when the battery charged at times when electricity prices were lower than when the battery is discharging. And we picked the associated markets that you can see in the matrix here and customer types based on feedback from market leaders in the space and during our analysis of which markets were relevant to cover for this study. And so just as some quick takeaways to consider, the demand charge management strategy is predominantly more valuable than energy charge arbitrage opportunities for many commercial rate structures from what we had assessed. And customers subject to the highest demand charge rates are generally able to yield the best returns, but the rate structure and load profile of the customers plays a significant role. And so the table on this slide shows the payback period in years for each city or location and building type covered in the analysis and highlights some of the following points. The attractiveness of the batteries for peak demand charges management varies significantly by region and by customer type, and the business case can be very attractive in one city for one customer type, but unattractive for another customer type as well. And then equally, the case can be strong for a customer type in a certain city while not making much sense for the same customer type in another city, depending on what rate structure and load profile is associated with that market. And in general, Los Angeles and New York City were identified as markets where the business case is generally the strongest, which is largely the result of demand charges imposed by utilities being relatively high, with steep variations between peak and off-peak periods. And the most attractive cases are buildings which have regular and pronounced demand peaks occurring during times when demand charges are high, also paired with large differentials between peak and off-peak demand charges on a daily basis. And in some cases, the addition of an on-site PV system would likely enhance the business case for energy storage by significantly reducing the electricity needs of the building during peak daytime hours and being able to use that energy also during additional hours. But it's not always the case. Certainly, storage as a standalone option can be much more profitable and beneficial than combining the two. And I think the major challenge for C&I energy storage in general is that the attractiveness varies significantly from customer to customer. And the various parameters can be highly sensitive. So the system size required to provide maximum value is also highly case specific. This means that it's very difficult to offer a standardized solution, and every customer has to be evaluated for feasibility in advance. So this increases the cost of building systems and acquiring customers, and also relies on accurate historical data being readily available or being able to be procured by either the supplier or another vendor. And so this is seen as a primary reason why C&I energy storage has been slower to take off than many perhaps may have anticipated. And in addition, the economics of the business case are also highly reliant on the structure of the utility tariffs and changes, such as lowering the demand charges or increasing energy charges, could significantly impact the business case in the future. So it provides a bit of uncertainty and risk for investors involved in these systems. And so to move on with a specific case study, we looked particularly at an office building in Los Angeles, California. And although the load profile of this office is generally flat throughout the daytime, but just by shaving a small amount, the highest monthly summer peak can be shifted to after 6 p.m. every day, when demand charges drop significantly from $30 per kilowatt to $17.50 per kilowatt hour. Per kilowatt. And using a default target strategy of shaving 3 peaks per day, then the payback period is already highly attractive, but the costly July peak cannot be avoided, as is indicated in the chart in the top right corner of this slide. But however, if the model is set to shave the fourth most expensive peak each day, then the July demand charge can be significantly cut, and the battery capacity required would increase from 50 kilowatt hours to 60 kilowatt hours, but the payback period would actually fall to 2.3 years, or closer to 2 years, while currently it's closer to 3 years. And if the model is set to target the fifth most expensive peak demand charge on an hourly basis, then the extra cost of the battery starts to outweigh the potential savings, and the payback period begins to increase. So this highlights how each system must be tailored to the individual needs of each customer, thus not allowing for a lot of room to standardize options across the board. But I'll go ahead and hand it back to Julian now, so we can discuss some of the policy drivers of C&I energy storage throughout the U.S. market.
Thanks, Cameron. Obviously, looking at the economics of to C&I storage is particularly core to any business model and for driving growth in the market. But what we're also seeing is actually a wide mix of other drivers, ranging from specific policies and incentive programs to more indirect drivers that can incentivize the installation of behind-the-meter C&I storage, ranging from things like the revision of net metering programs, incentivizing the self-consumption or increasing the benefit of self-consumption of solar PV, and also demand response and utility procurement programs that are really starting to drive the potential revenue stream that are available for C&I storage across different states. Now, I assume you're obviously all familiar with some of the big drivers, but what we're already seeing is that the trends towards procurement targets or aspirational targets in states other than California is really starting to drive the interest and the potential for C&I storage across different states, especially on the East Coast in New York and Massachusetts, but also direct incentive programs and tax credits, and even direct grant funding, like recently made available in Massachusetts, are crucial for kickstarting the market. I think that's really one of the key learnings is once you kickstart the market through an incentive program or through some form of indirect incentive, we are seeing more and more customers interested, and then developers can go in and actually assess the potential for the individual customers on an economic basis. But we really have seen that unless there's some form of Kickstarter, it can be quite difficult to really convince customers of the benefits of storage, which are wide-ranging and will only increase going forward. And I think outside of the main states that can spring to mind when you analyze the current market and future market growth, namely California, Massachusetts, New York, and Hawaii, we're also seeing a wide range of different policy incentives occurring across the United States. So whether that's in Arizona or whether that's in Maryland, where we've seen a tax credit, or whether that's actually looking at the potential for demand charge reduction, the number of customers available or eligible for high demand charges, and the potential to cut these, which is particularly pronounced in a range of states, but also including Arizona, Texas, or Colorado. And I think the last point, which today is relatively minor in terms of its overall market impact, but we certainly predict it to become much stronger going forward as the coupling of solar and storage for commercial and industrial customers. And outside of the 4 core states that I've mentioned already, those states where we see the strongest growth in commercial solar going forward are again quite wide-ranging, but also do align with some of the other core drivers. So again, states like Arizona, like New Jersey, like Maryland stand out alongside Texas. And I think the only other point to make on the driver side is really that we're seeing a great uptake in utility interest and actually the development, or at least the exploration of potential procurement programs that do exploit behind-the-meter energy storage. And ultimately, that's just to the benefit of both the customer and the grid, exploiting the synergies, providing grid balancing and capacity services, but also reducing energy costs at the end customer. So having looked at this set of drivers, we wanted to provide a more comprehensive overview of the competitive landscape today, but actually also some of the key trends we think are important for players within this market to take advantage of the growth potential that we see going forward. I mentioned it earlier, we expect the annual market of C&I storage in the US to reach 400 megawatt in 2022. So really it's important, how can you take advantage of that opportunity, and what are you up against? So before I introduce this scorecard, let me just tell you a little bit about the methodology, because I think it's quite important to provide that understanding before I talk about some of the results. What we set out to do is really do one of the most comprehensive surveys and analysis of suppliers, developers, and operators of C&I energy storage in the United States. And what we did is we measured them against 11 different metrics, ranging from current projects to future pipeline to utility contracts, but also looking at the capabilities that the suppliers and operators are currently putting out there and claiming, ranging from the ability to stack various revenue streams, looking at the number of demand response contracts, and really looking at the technical capabilities going forward to exploit aggregation and management of these energy storage portfolios. And what we really found is that based on our analysis of the industry and our survey of core players, is that there's 3 leaders that scored above average on both categories, and that's really what's highlighted within that leader box. To say that you cannot really say that there's a single leader within this market because it's such a fluctuating space. This survey and analysis was done at the end of 2017. If we fast forward 2-3 months, then the landscape already changes again. But really the 3 leaders that we currently see standing out in the market are STEM, Green Charge, and AMS. And what we found is that the core success factors have really been focusing on a customer experience, securing customers with multiple sites, and building out a portfolio. It's the investment into software and aggregation capabilities, and also the ability to secure utility contracts and demand response contracts in the market. However, it's quite interesting actually when we spend a bit of time speaking to all the different stakeholders and looking how the market will develop in the future. There's also slightly different business models and slightly different focuses emerging from different companies. There's obvious focus on the software side. However, we're also seeing companies more and more highlighting the hardware capabilities and actually leadership in technology. And they inherently will focus on slightly different customers and slightly different value streams, but it's certainly something to look out for and see how new battery technologies, but also existing battery technologies through better hardware, whether that's the power conversion systems or whether that's the actual battery technology deployed, will change the face of the C&I supplier landscape going forward. And really the complexity and variety of where people play comes out when we try to map all the different players or selected players across the C&I value chain in the US. And what's quite important to point out there is there's a lot of players that don't really fit into one bucket. They may be active in actually developing the battery systems and doing the system integration and the software, or they're only working across certain parts of that value chain and then partnering with other players. So it really highlights that complexity. But what we're also seeing is that through partnerships and mergers and acquisitions that have been quite prominent over the past year, players are looking to span that entire value chain and look to ensure that they offer the best services and best products across the different buckets of that value chain. Going forward, what we also expect across that value chain is a form of consolidation of supply. We see more and more larger players really emerging that are less focused on regional opportunities, but that can cover the entire United States. And we're also seeing larger global companies looking to enter the market, acquire companies along that value chain. I'm sure you're all aware of some of the recent acquisitions carried out by some of European energy companies like Enel or Engie. And we expect more and more of that to happen, and being able to offer an integrated solution that covers both distributed energy resources and energy storage, but also energy services and energy efficiency, and really providing everything out of one hand to commercial and industrial customers. We also wanted to just provide you with a little bit of insight on the current sales channels in the market, and this is based on our survey of the industry. So it is based on the primary data from current players in the market. And we see that really the most common sales channels in terms of getting to the customer is working with electrical contractors or solar installers and integrators. And what we think is that the variety of these routes to markets will increasingly be integrated under the management of a major energy company that can, through strategic investments and acquisitions, widen the capabilities and really own parts of that, whether that's the combination of demand response and energy services, which can be used to also sell energy storage to commercial industrial customers, or whether that's more the other route where we're going down working with solar installers or project developers of various distributed energy generation technologies. Lastly, just to give you some of our future prediction and expectations for this year, some of the big trends that we're seeing in the commercial industrial space in the US is that we see customers increasingly waking up to the opportunities that arise for them from energy storage. And really they're seeking long-term stability and predictability of their energy spending. They want to improve reliability, and they want to increase corporate sustainability. And what we believe is that this creates new opportunities for distributed and renewable energy solutions, including energy storage, but also the wider measures as mentioned, like energy efficiency, lighting, and energy monitoring. Therefore, what we expect is that storage for C&I customers will increasingly be offered as part of such packages, including the other technology, where it creates the cost savings and ensures reliability for the end customer. But at the same time, what we believe is that the development of artificial intelligence and improving software and system management using big data will be absolutely crucial to tap into the range of value streams that are becoming available from utilities across different states, and be crucial for the long-term success in a highly competitive market. And that can be achieved either through your own development or through effective partnerships. So before we finish off with our final slide, which basically provides you with the end result of our forecast and a few key points to take away, we'd just be interested again in your opinion. So if you would like to provide your input on who you think is going to be the next biggest state for C&I storage after California in the next 5 years. So we've given you 5 different options here, and also another category. Now, I'd obviously be very interested to see all the specifications of who else things that it states that we haven't listed here, but we have provided you with the options of Arizona, Hawaii, Massachusetts, New York, and Texas. So it'd be great to get your input again, and I will give you our view before we finish off, and then we can go from there into the questions, and hopefully we have lots of questions to answer throughout the Q&A session. We're going to make sure that we have about 10 to 15 minutes to answer all your questions, but also to let you get off and rush off to your next meeting within time. So again, we've had about 50% of participants respond to the poll. I shall be closing the poll in about 5 seconds. So if you want to cast your vote now, and then we will discuss the results. Great, fantastic. So that's an interesting result, but not too surprising actually. So I think most of you have obviously put New York up as the leader here, and that's certainly something we do agree with. When we switch to the next slide, you'll actually see that. But obviously, based on the strong end customer economics, but also the recent policy push for energy storage in New York, I think that's a very reasonable assumption. Not a huge surprise. Interesting that 20% of you thought that Hawaii will be the 3rd biggest market over the next 5 years. So that's quite interesting, and always keen to hear your opinions after the webinar as well. But let's have a look at what we think the market will do. So as you can see, at the start of the webinar, we had this slide once already. But now I'm actually giving you the year-by-year breakdown across the next 5 years. And what we actually expect over that time is that C&I behind-the-meter energy storage will exceed annual installations of 400 megawatt in 2022. California will, unsurprisingly, continue to lead that market. And right following that is going to be New York and Massachusetts. We actually expect a little bit more project activity in Massachusetts in the short term off the back of the recent grant funding that became available. But then over the forecast period, New York will become the strongest market behind California, aligning nicely with what you said in your poll. And actually what we've seen throughout the webinar today is that attractive economics for customers, even just based on demand charge reduction, will drive the market across these states. But actually new value streams that will become more established will become really what accelerates the growth, building on a stable market potential. What we also saw in the webinar today was that in order to establish a strong leadership position, it's all about creating a convincing customer proposition that can be replicated across multiple sites. It's about investing into software and aggregation capabilities. And it's also about securing the utility contracts that will undoubtedly become available across different states. And lastly, what we see as probably one of the big trends is the wider integration of energy storage with other measures for commercial and industrial customers, really helping customers take control of their energy usage and actually taking over the management of that energy use and generation on site, ensuring both lower cost and increased reliability. So that's our conclusion that I will leave you with. Thank you very much for listening to myself and Cameron today. We're right on time, so we've got about 15 minutes for questions now. I will leave you with the holding slides, and while you type away your questions in the little window on the left-hand side. Also, if you want to discuss anything we talked about in the webinar today in person, feel free to get in touch with myself and Cameron. We're always keen to hear your opinion, to hear your voices and your feedback, so that we can further improve and make our research more relevant. So as you can see, there's our contact details. So feel free to get in touch. So thanks for listening. So we're just waiting for some questions to come in. Right. So we already got one question that came in. Cameron, earlier when you were alluding to the different peaks within the model, can you just elaborate again a little bit on what you meant by the kind of different peaks within that profile?
Yeah, sure. So on an hourly basis, our model targeted when demand charges would peak, so targeting the most expensive periods of the day throughout the course of a day. So if you targeted the four largest peaks a customer would normally have without a battery system, we would be essentially making the fifth largest peak the new primary peak for the day. So eliminating those four peaks that would have originally been the highest or most expensive parts of the day for demand charge purposes, and making the new fifth peak, fifth period the new peak for that day. So that's what we meant by shifting to different peaks throughout the day and eliminating some of those more expensive peaks to try to shift that demand charge value essentially.
Great, thanks, Cameron. We've got some more questions coming in. So we've got one question around the different value propositions that will drive the kind of bundling of storage with other energy services. I think one of the core pointers of that trend is really how we're seeing companies that have that capability or are acquiring that capability looking to bundle that. I think one of the most prominent examples that's probably quite visible just now was the acquisition of Demand Energy by Enel, and then more recently of Enenoc by Enel. So if you are familiar a little bit with what Enel has been kind of pushing for in the past few years, it's really about bundling or trying to create a new business unit that is well positioned to take advantage of all the different technologies that will drive the energy market in the future. And I think by bundling all those capabilities through the acquisitions, combined with their existing knowledge and expertise, they're really well positioned to drive this into especially large industrial customers and provide a one-stop solution. And that could be through a more traditional ESCO model. It could also be really just taking control of the entire energy generation and management on site of the customer. And I think we're just at the beginning of that to really establish itself. Right. Got some more questions coming in. Keep them coming, please. We'll work through them. Let me just. So one quick question that's probably more relevant for you, Cameron. There's a question just around some of the pricing assumptions and a view kind of going forward. Can you just briefly allude to that on the modeling?
Yeah, sure thing. So for the modeling exercise, we went ahead and used our what were our 2018 projections for battery system, energy storage system costs. So that included a cost of $260 per kilowatt hour for the battery modules, and then a catch-all $375 per kilowatt cost for the rest of the balance of plant to go with that system. And again, that was in line with our 2018 projections, and we do project further in future cost reduction as we continue to see innovations from the supply chain and also from the downstream markets as well.
Great, thanks for that, Cameron. got a few more questions coming in now. Yes, keep them coming, please. We also have one question here, just a little bit around the kind of solar plus storage question. I think on the solar storage side, what we haven't done right now is in our modeling taken that into account and assumed the installation of solar and storage, but it's certainly something we'll be looking into more throughout 2018. Both myself and Cameron across the different services that we look after in North America. And I think it's going to be a more interesting proposition going forward. So thanks for that question. Then we've got one more question around different markets or new states kind of drafting energy storage bills and what might happen there. I think at the moment what we would have to say there, and Cameron, please add anything that I might be missing here, but really what we're seeing is there's quite a lot of states that aren't that attractive from a pure economic basis. So those states would really be highly policy driven in the short term. So I think outside of the key markets that we discussed and that were also highlighted in the poll, there is currently not a huge amount of other states that would really be driven from a pure economic proposition. And then we've got one question around the installation. That's actually a good point. So there's a question here for everyone who can't see it. Basically, whether we included the cost of installation as part of our modeling. And for that, Cameron, do you want to maybe quickly answer that one?
Yeah, that's to be a catch-all for our balance of plant side as well. So the battery module with the balance of plant, including installation, PCS systems, and so on.
Great. Okay, we've got an interesting one. So I have to actually say, so the question here is, do you see carbon pricing as a driver for energy storage moving forward? I have to be perfectly honest. We haven't taken that into account right now, and if I'd be, or if I'd have to take a bit of a guess, I would probably say it's not going to be a huge driver in the short term. I think it's going to be more over the long-term economics and benefits of having on-site generation and storing electricity there. Right, we've got more questions coming in. It's really starting to flurry in now. So let me try to manage them slightly. There's one question on the view regarding the solar plus storage ITC. Cameron, I think again this is one that I would leave to you.
Yeah, I think it's definitely an interesting opportunity and something that we'll be looking to factor in when we do more exclusive and explicit modeling to pair solar with storage for C&I and generally behind the meter or in front of the meter with utility scale applications. But yes, certainly the opportunity to apply the investment tax credit to a solar system paired with storage could be a huge asset and opportunity. It obviously constricts what you can do with that system. You'll be primarily using that to balance the generation from the PV system to other parts of the day to offset an arbitrage against peak rates or demand for a customer. So maybe it kind of eliminates some of the value stacking opportunity for other services. But if that's really the main goal of the project or the investment, especially if it's a market that doesn't really have those kind of opportunities in terms of other services to be able to provide for a customer or the grid, then certainly it's a viable asset, especially once you get past some of the clarifications that I think still need to be made from the IRS's perspective. But we're seeing it really become exciting, particularly at the utility scale side as well, with some impressive numbers jumping out from various proposals.
Great. Thanks for that. Right, we've just got a few more question. Okay. We have one question again regarding the scope on the balance of plant, what that includes. So the balance of plant, what we include within that is basically we count it separately. So we have the balance of plant and the PCS price as two separate cost points. The balance of plant would include the HVAC on all those parts of the system, and then the PCS is costed separately within the modeling. So let me see what else we've got coming in. Got one question on whether we have done any modeling on utility scale solar plus storage. I think it's certainly a very, very interesting topic that we are monitoring very closely. We have done some high-level modeling as part of our energy storage intelligence service and working closely with our colleagues across the solar supply chain. And that's really part of the work we're doing through our research and intelligence services. So if you've got any questions about that, if you'd like to have a more close-up discussion about that, please feel free to get in touch with us directly.
Yeah, and I would just add on to that from a solar perspective, we're certainly doing utility scale solar project analysis and economic attractiveness in the U.S. and globally as well, but in the U.S. in particular at a state level. So yeah, certainly adding a layer of storage onto that is a clear next step for our analysis.
Right, I think we're coming towards the end of our Q&A session. I think we managed to answer most of your questions. If we missed any questions throughout the analysis, because we had a lot coming in now, so if we missed any, feel free to get in touch either with myself and Cameron directly, or feel free also to go through the ESA, through Nitzan, and let us know if there's any questions following the webinar, and we can have a phone call or an email exchange with you to answer them, because we also want to make sure that no questions remain unanswered. Great, fantastic. Well, thank you so much for listening to myself and Cameron today. Hope you found the webinar informative. We certainly very much enjoyed doing this and working together with the ESA on this today. So I believe I will be handing back to Nitzan now. So thank you very much, everyone, and enjoy the rest of your afternoon.
Thanks, Julian and Cameron. That was an excellent presentation. So pleased that you made the time to come and present to us. And as I mentioned at the top of the hour, the presentation and the slides will be made available to you all. And then certainly feel free to reach out to Julian and Cameron directly if you have follow-up questions. A few quick announcements before we close the call. Just a reminder on some upcoming webinars. On January 24th, we have the U.S. Energy Storage Monitor fourth quarter summary presentation. January 31st, we'll have the third and final installation of the Energy Storage Safety and Compliance series. The webinar is titled, and then you can find more information on how to register for these webinars in the events tab on our website. And then for those of you who are not ESA members but are interested in digging a little bit deeper into membership, please reach out to our membership manager, Richie O'Neill. We also have a couple of events coming up. We have our 2018 Energy Storage Policy Forum on February 14th, Valentine's Day. You all are welcome to spend Valentine's Day with the ESA policy team here in Washington, D.C. It's a once-a-year event where we really dive into the policy issues for energy storage, so we encourage you to come. And then our 2018 annual conference will be in Boston this year, April 18th through the 20th, and there's currently a call for papers for folks interested in participating in the conference. So that's all we have in terms of announcements, events, and webinars coming up. So thanks again, everyone. Appreciate you taking the time, and thanks, Julian and Cameron, for making the time, and have a great day, everybody.